Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday the Australian dollar pair attempted to recapture its bullish charm after staging a minor recovery back towards 73 cents and reached a brief temporary high of 73.13 before slipping lower. Overnight was the US core PCE price index, which was for the inflation for July, which is assessed as the Fed's preferred measuring for inflation. The personal consumption expenditures, or PCE, price index, excluding food and energy, rose by plus 2% in the last 12 months, though July does see that could see further accounts with the US economy achieving plus 4% last month, with the comments departure saying that the two reports added, or should I say heightened, investors' expectations for a Fed rate hike as of next month's meeting. I assess that the market is looking for September for a 25 basis points, and we've penciled in at December at this stage. Looking at the technical outlook, though, is the Australian dollar is still poised for a down test, now crushing the support at 72.65, as the market is exposed towards 72.0515 before any profit taking is likely to come in. Resistance on the day seen around 72.90 to 73.40 as a potential sell. The euro shies away from that 117.55.65 level and now possibly posting an outside range day, as you can see here. If this is true to its nature, I would like a little bit more confirmation from the MACD, but the RSI at this stage looks to the midway point of 50. A break beneath there could give further exposure and bring in a target towards the region that I'm looking for of 116.20 as minor and 115.60.65 before short-term profit taking. Any rallies should see resistance around 117.15 to 65 as a sell zone. My outlook on dollar yen has never been that convincing to the bull case, and over the last 24 hours the market has broken back down again after recently breaking above 55 level. The market now breaking down. If we see a move sub 95 on New York close, then that would give further indication that 110.20.45 is in focus. On the day, though, intraday resistance seen at 111.40. The sterling case, a little bit on the slow uptake after the previous day from the rally triggered by the EU's chief Brexit negotiator, Michael Barner, after saying that the UK could expect a partnership with Brussels, as there has never been any other third country. Keep a close play when you're trading the pound. The fact is, if we do see a break above this 130.40.60 level, could give further indication towards 131 to 134. But let's see how it plays out. This resistant line that emanates around 136 is strong, and it could prove as a deterrent when it comes to the bulls challenging the upside. The gold slipped overnight and briefly to underneath 98 level, but didn't close there. If we get a close under 98 tomorrow morning, 7 a.m. in New York, then this will give further indication that the market has negated the top side and is looking back towards a region somewhere of 1,192 to 88. But while intact and remain above 98, then I'm looking up towards 07, 11 and 21. And rounding up with oil, well, the market at this stage is questioning whether the fact is that we are looking for further challenge to the upside. It did get to 70 overnight, but didn't continue on. After posting the high of 70.27, the market retreated and now slips underneath the $70 handle, but not quite away from re-challenging it. So let's see how it plays in the next 24 hours. If we do get a rejection, then I'm looking back towards $67 a barrel. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day and a great start to the new weekend.